All righty, good day. So I had some technical difficulties on the weekly meeting. So what I wanted to do is come back and shoot a video that would kind of recap what we talked about this weekend. So if you give me a moment, I will pull up the video that we looked at. Am I? Good morning. All right, I wanted to come on and make a video on a simple way to trade. This is how I trade every week. I found this to be uh, a profitable way to approach the market and trading in general. And I based this style of trading off the ICT 2022 mentorship, mainly coming off of slide number 3. So it starts with finding a weekly order block. In this case, this example I'm going to use is gold. There's a bullish order block, right? The red candle and the green candle creates the bullish order block. My expectation is for price to sell down into this order block and then buy up at least to the negative 27. Okay, if you go and you watch that ICT 2022 mentorship and primarily slide number 3, the concept is when the market creates an order block, in this case, it's a bullish order block, you're going to get a displacement going up, right? So this would be the weekly candle. It starts here. It gives you the bottom wick. You get the strong push to the upside, which creates displacement or an imbalance. And then you get the wick to the top side. So the theory behind this trading style is that the next candle that opens up is going to open up. It's going to create a wick. It'll go down into your order block to fill the imbalance. Then it will trade to a new high, which is generally speaking this negative 27. Okay, so all I do is I come to the market, I look for the order block. This week you had the bullish order block on gold, so my expectation was for the market to open up, go down into that order block. If I fib this green candle, I will mark my golden zone. I will put a ray at my 78, horizontal ray. And if you want to make this a overly simplified version, you can put your long tool, you can enter the trade at the 62. My golden zone starts at the 66 or stops at the 66. So you'll have to adjust yours for the 62. Put your stop loss at the 88. Put your take profit at the negative 27. This trade will give you a 3.39%. And as you can see, price comes down, taps you into the trade. And, we're currently waiting for the price to go up to this negative 27. If I drop down to the 4-hour, we can see inside the order block. You see where price came down, put us into the trade. We see the trade is pushing up. I anticipate the trade pushing up, and you can see this displacement candle coming down. These are the imbalances that need to be filled. So in actuality, the trade will probably at least come to the 23.68 level, but you don't have to be greedy since this is a trade that should fill this imbalance. I would just take it to the negative 27, and this is 23.57. And you can watch to see that this happens by the end of the week or, early next week. And that is it. You don't have to add to it. You don't have to take away from it. You can do this every week. Win many trades, you'll lose some trades, but we win and we lose. The percentage is probably going to be in the 80 percentile that you win. That is it. You don't have to add to it. You don't have to take away from it. If you do this every week, you're going to find a level of success. And let's go and look at another trade, EUR NZD, because there was an order block this week in the trade that I actually took. Let me kill all these drawings for you. I'm going to hit the replay button. Okay, this coming into this week, it was a bearish order block. So again, I'm going to fib the last candle. I'm going to fib the direction that the candle moved. Let me go in here and change my settings back to the old settings. That way, instead of it being at 66, we'll put it back at the 618. That's the standard fib setting, just so you can see how to mark this up. So for me, I bought this trade back up. I bought it from here up to this area because all I need is 100 pips per week. But you could be the person that actually takes a short at the negative 67. I mean the negative 61. Put your stop loss here, and your TP would be at the negative 27. I'm sure there's an imbalance. We'll drop down to the 4-hour to take a look over here. Perfect. You see the imbalance. That's what we're targeting. All right, my trade this week was from this level to this level. And we're gonna hit play. As you can see, I got the win. Now, if you had waited right here, this trade you wouldn't catch. I would always go and look for this imbalance to see where it was. And the reason I think that this is not going to go up here, I think it's going to come back and fill this imbalance. So at this point, I could adjust my entry to this level here. And I would just put my stop loss above these highs. We'll leave everything the same way. We'll leave this target. And it'll be interesting to see how this plays out this week. Let me go to the daily so I can see what this is. All right, so this is going to be a 2.77 risk to reward. I guess you could drop this down to give you a 3%. As long as this first order block is covered, that should protect you. So this will give you a 3% risk to reward on this trade, and an easy win of 100 and some pips, I'm sure. This is 228 pips. Yeah. So You could probably get the stop loss down if you know how to drop down into the lower time frames. I'm giving you a very generic version, an easy way to take trades just based off this 4 hour chart, without you having to drop to any lower time frames. You're using the weekly and the 4 hour to select and take, enter every trade. So that's it. Nothing more, nothing less. If you need more info, reach out.
All righty. So, we basically talked after that. We want to follow up with those trades. I don't personally know how that EN trade played out. I think the other trade played out fine, but we're going to talk about it. Okay. Let's look back at gold. If you remember, that video talked about gold. We had this order block here. We had tapped into it. We had talked about gold going up to 23.57. As you can see, take profit smashed. At that point, we could have sold it back down, and we could be buying it back up like I'm doing personally right now, back to this area. And we could have done all that based on all of these imbalances, okay? So this was gold last week hitting our TP, all right? Then I caught this sell back down, right? I caught this sell based on the 15-minute. And that happened, if you look at this time, this is a 5 o'clock bullish order block, which means this 9 o'clock candle pulled back into our order block to sell. So we could have done this setup the same way that I talked about. We could have fibbed this candle, or you could have just dropped down time frames. If you don't know how to drop down time frames, when you get your order block, you do your fib and just take the trade based on your fib. And your negative 27 probably, let's just look at it because I don't know. Right down to now. Fibonacci. There's no wick on the bottom of this candle, which is weird. It's a very small wick. Okay, so your negative 27 would have left you very short. But the point is, you still could have, well, you wouldn't have caught this move at all. You wouldn't have caught it, never mind. You wouldn't have caught that move because it didn't go all the way to your zone. So you'd have missed that trade, which is fine. But if you understand the kill zone times, you'd have definitely been able to catch this particular trade, or, because it came down into the kill zone at 9 a.m., right? You got the bullish order block at 8. You'd have just been waiting for the pullback to enter the trade for the buy, and you would have been off to the races, right? So once you got this, we get this push down, break of structure, you get the pullback, you entered right here at 9:15, and you were pushing, right? This is a very easy trade setup. We see the break of structure right there at this line that I placed. We got the pullback. Your boy got in the trade pushed, okay? Once the trade pushed and we pulled back, we got past this area, my stop loss was set here, and the rest of the day, it just kept pushing down. I ended up taking profit towards the end of the day, and it's all she wrote. Then I was waiting this week for price to pull back, pick me up into the trade. So this is a chalk. The push up, the pull back gets you in the trade. You're off to the races. Where is the races taking you? To this imbalance, right? I don't need to be greedy. I don't need to be greedy. I don't have to try to trade all the way up to this imbalance. This imbalance is fine. That's a heck of a run for gold, right? If you look at this is a 15% trade. You don't need any more than that. All you have to do is understand that this displacement gives you an opportunity to take the buy. Now, listen, what I've repeatedly said is if you are not someone who trades the pullback, the retracement, then this trade is not going to be for you. The trade that you're waiting for happens once price pulls back at least 50% from this drop. So you're the person who puts the fib from the top of this structure. And I know this is a 15-minute time frame, but you would do this on a higher time frame, maybe the 4-hour. Because what happened was price pushed down, it broke your structure, broke this low right here. It broke this low. If this is a swing low for you, or if this is a swing low for you, it broke all of it. So now you're just waiting for the price to pull back past your 50%, which would put price back into the premium, right? Maybe all the way up to the 78, where this breaker block could be, if that's how you see it. And then you take your sell from there. However you see it, it works. All I try to stress to you guys is you have to be consistent. The consistency is what's going to give you wins, is what's going to pay you. So that's the gold setup. That is the gold setup. Let's go back and look at that EN setup that I'm not sure how it played out, because I wasn't still trading it. All right. So, all right, let's talk about her. Okay, so this was the push up back into our zone, right? This was the breakup structure for the 4-hour. This is the pullback. Remember, I told you to adjust it down, right? So if you had adjusted it down, price did not come back. It did not come all the way back up to this level. But if you see on the 4-hour, the imbalance was from this wick to this wick, right? So once this price came up and wicked out, and we got another wick, I put me an entry here, right? And my entry here was to get my 100 pips. And I got 98. You can see I got 98.8 pips. I could have got 100, but I didn't want to be greedy. Why not? Because I know that the imbalance that we were pushing down to was this one. I wasn't sure that we were going to push all the way to this imbalance, because there is still some imbalance here, right? And I recognize that this could have been, like, this push down could have been, what do they call it? Inducement, right? Could have been inducement for price to push up. And that's what it looks exactly like. That's what it is. So if you don't know inducement, you would have lost this trade, which is cool because we all lose trades. However, if your trade goes 98 pips or 100 pips in this case, and you don't take profit and you lose, I think there are other issues, and we can't really call that a loss. But I would look for this trade to pull up. Let me see what this monthly candle looks like. I think we could possibly go into this imbalance before we push down next month, but it doesn't matter. To me, you trade based on order blocks, right? And if this is not on the weekly, then I wouldn't worry about it. This is a monthly order block. You could fib this candle, get the zone. Maybe that's where price is going. But for me, just to keep things simple, we talked about the weekly and the 4-hour chart, right? So I want to look at one more pair, right? On the call, we actually went further down into the time frames. But I will do that again this coming week for the people who missed it. So for now, I just want to stick to these two timeframes because there was another trade, US 30, that kind of played out after the fact. All right, let's look at this on the weekly. So 5 weeks ago, there was a bearish order block. Golden zone, 78, we marked it up. Price never bought back up. Price pushed down instead, right? Price pushed down. It filled a different area, right? Price pushed down, filled this imbalance here, right? From this initial push, right? It came back down, it filled that imbalance. Now I know the target is the area that I put. So price pushed up, it came back, it filled this imbalance, could have gotten the trade for the buy. It pushed up again, it came down, gave you another opportunity, and then price eventually pushed up to this zone. If you're against the trend trader, that trade was a 1,266 pip trade that took about from 3 June to June 24th. So I don't know, 3 weeks, right? It's a lot of time for some people. 3 weeks to get 1,266 points on the US 30 is pretty good, especially if you're able to trade the mini, right? Which many of us are if we trade with the unregulated broker. If you aren't, then it is what it is. But these are great opportunities to take the trades when you understand the target of the trade, right? Now, we're almost finished with the month, all right? What I would have preferred to see is a red candle, but I don't know if we will get that in the next 4 days. But if you are an ICT buff like I am, this last month candle wicked this wick, which told me that the market should be selling. I figured it needed to come back to this area to sell. So maybe we will see a market sell from this point, right? But in order to be a part of those sales, we have to drop down to these lower time frames and wait until we get the breaks of structure. Then the market pull back for us to get into the sell. So at this point, we can't do anything, right? Prices is going to break this little high, at which point this will be the next high. And if it breaks, this will be the next high. So the way I see this, we're either breaking higher, and this is my personal key, this high up here, or we're breaking lower, right? But I'm not doing anything with US 30 until I see one of the two. And I would suggest the same for you guys. Consistency is what creates profit, right? Not our intelligence, our consistency, our ability to do the same thing over and over and over, right? The ability to master yourself, in spite your fears, in spite your discomfort, in spite your thoughts, do the same thing over and over and over. I hope this helps you. There are going to be great opportunities. There always are great opportunities. Every week, there are great opportunities. So whatever you do, be patient, wait for your setup, and I wish you well in these market streets.